Welcome back, traders, to another live breakdown. What I want to do in this video is go over one of the most important things with you guys, and that's using proper risk management. I cannot tell you how many people come into this Forex market and they think that they know everything, they do too big of a lot size, they blow their account and they get discouraged and they say, oh, Forex doesn't work, it's a scam, whatever it may be. And that is honestly one of the biggest reasons as to why people fail in this market, because they don't fully understand how to use proper risk management. And a lot of mentors don't teach you this. You can't find this really anywhere on the internet. That's why it's very crucial that I wanted to go over this with you guys. So let's definitely start. So right off the bat, a proper 3-to-1 risk to reward ratio, what does that mean? That means that our take profit, our initial target, which we are going to aim for, is 3 times bigger than our stop loss, our risk, every time that we go into a trade. So it's very crucial that you guys have a proper 3-to-1 risk reward ratio every time, meaning that let's say that we go into 3 different positions, right? Each position has a 50 pip stop loss, and then each position also has a 150 pip take profit, meaning that 50 pips are stop loss times 3 equals 150. So we do have a proper risk reward ratio there. So we could maybe have 2 of the trades hit our stop loss, we're out negative 100 pips, and then one of the positions actually hits our take profit for 150 pips. So we would be up 50 pips positive, and that's simply where proper risk management and proper risk reward ratios come into play, and it will really affect your trading strategy. You guys honestly shouldn't be trading more than 10 times a month, meaning that you should be maybe taking 2 to 3 trades a week. And that's what I do. I take about 2 to 3 trades every week. I do my analysis on Sunday, and then I actually look to enter the market around Tuesday through Thursday. And Thursday honestly is the best night to trade. A lot of people actually don't trade their whole entire week until Thursday night or Thursday morning, because there is so much more movement on those days. So when you guys are trading, you want to be risking 5 to 10% of your account. So if you have $1,000, if you're risking 10% of $1,000, the biggest loss that you guys are going to take on your account is a $100 loss. So if it goes over $100, you need to cut your losses and you need to keep moving on. And that's simply because you don't want to be over leveraging your account. You don't want to blow your account. That's what a lot of people do. They're risking their whole entire account. They have a $100 account and they're doing a 10-cent lot, not expecting to reverse and go the opposite direction, which it most likely will. So guys, if you have $50 to $100 in your account, you're going to be doing a 0.01 lot size. If you have $100 to $200, you're going to be doing a 0.02 lot size. And for each lot, the lot correlates with the pip. So if we go up 1 pip, we're making 1 cent. If we go up 1 pip for a 0.02 lot, we're making 2 cents. So it kind of gets fun when you guys are doing around 10-cent lots when you have $1,000 in your account. And honestly, the risk reward ratio playbook right here might be a little off, but honestly, I go like $100 is the 0.01, $200 is 0.02, $300. So the $300, a 3-digit, is going to correlate with the lot size of 0.03. And then once you have $1,000, it's going to be a 10-cent lot. So obviously, you guys can take a screenshot of this lot to refer to in the future. This is something that really helped me. And it says use only 25% of your normal lot size, both swing and macros, since they are mid-long-term trades. You guys can completely ignore that. This is just one of my mentors that gave me this chart, this little picture. I am going to actually make one personally for our team. So guys, don't worry about that. You guys can refer to this, but it's really easy to actually pick up on how to use proper risk reward ratio and how to use proper risk management. Now, what I want to do with you guys is actually go over the charts, and we're going to go over 3 different positions. We're literally just going to find the long or short, whether it's going to be a buy or sell, and figure out the proper risk reward ratio. So I'll see you guys in a sec. All right, here we are. We're on tradingview.com. Let's start by Euro USD. See full featured chart. It's 11:11 a.m. guys. Make a wish. Boom. So you guys can't see, we actually unbought Euro USD earlier this week. That shit completely went up to our TP. It's almost at our take profit. So this was a trade that we took last week, but I'm going to remove all the drawing tools. Let's say that we're currently entering by market right now. We get our long position. And our entry right here. So you guys want to make sure it's lined up. Our stops are going to be below previous support. Okay, there we go. We have our stops. So we have a 24 pip stop loss. So it's making like 70, 80. We'll make it 80. So we basically have a little over a 3-to-1 risk to reward ratio right here. You guys can't see the 24.4, that's 24 pip stop loss, and then the 80.1, that's an 80 pip take profit. So that's where you guys are going to be looking to actually find your pips for your take profit and stop loss. But right here, right off the bat, this is a pretty good position. Obviously, you observe the trend. We have been in an uptrend. It actually just hit a higher low right here, probably going to form a new higher high around these levels at previous resistance and then go up. So just like that, guys, it's very easy to do that. What I'm also going to do is go to USDJPY, since this is a pair that correlates opposite from it. Let's say that we're looking for a sell here. Short position. Stops always above previous resistance, just like that, guys. Boom, there we go. Take profit, new resistance right here, that's where I'm looking. So our stop's at about 71 pips, and our take profit is about at 153. That is a little bit less than a 3-to-1 risk reward ratio. We can make it proper. All right. 160, that should be correct. It's right there. Perfect. So there you guys go. You have another proper risk reward ratio. We're just observing the market. We kind of have been channeling, ranging, not too much going on, but we have the 200 EMA hovering right above. And I don't think that it's actually going to close above the zone. So that's another scenario that we could see on USDJPY. Let's go to Euro CAD. Like I said, guys, it's really easy. You're just overall figuring out the analysis. We have a W pattern right here. Boom, this could shoot up all the way up there. Move all drawing tools. Obviously, we're going to be looking for a buy here, long. Support right here. Perfect. So our stops are going to be right below previous support right there, right where that moving average hovered above. And then our take profit is going to be up here at these levels. So our stop loss is 44 pips. So we basically do 40 times 3. What is that? That is 12. So 120 pip take profit would be around there. Right there. So we have a stop loss at 44 pips. And our take profit is at 121 pips. So honestly, guys, it's really this easy. You just need to figure out what range the market is going in, whether it's going to be an uptrend, downtrend, if it has been ranging, or it's actually trending like we have here. We have kind of been in a downtrend, but it's looking to make its way up to these levels right here. The reason as I found my take profits and stop losses, I'm simply looking at previous support and previous resistance levels. So I hope you guys enjoyed this video. I hope it helped a lot of you out. If you guys haven't yet subscribed, please do. There will be a ton of more informational videos on actually how to trade properly from myself. If you guys have not got my Forex course, I definitely recommend getting it. And we also have FX Accelerator 2 coming out on February 20th. There is a link for the waitlist below. You guys definitely need to get on that waitlist so you can have access to it before anybody else. And you're also, if you're on that waitlist, you're going to get the course at a much cheaper price than anybody else will if you are not on the wait list. So make sure you guys do that. Also, if you guys want to take the same trades that I'm taking every single week, we do have our group chat. There's a free 7-day trial, so you can come in for 7 days. Obviously, you do have to put a credit card on file, so we can bill you after the 7 days. But you can opt out if this isn't for you, if you feel like the trading group isn't helping you. But like I said, $75 a month is a very small fee to actually learn consistently every single week from myself. We don't just have trade alerts called out. We actually have every Tuesday and Thursday live trading webinars, and every Sunday we have a live Q&A webinar where everyone comes on, they ask questions, and I actually go over those questions with everyone. But thanks for coming on this video, guys. If you have any further questions, definitely reach out to me on Instagram, and we'll stay connected. We'll see you guys on the next video.